Katie Thomas, lead at Carnegie Consumer Institute, and Sucharita Kodali, VP Principal Analyst at Forrester Research. Thank you both for being with us. I'll start with you, Katie. What are you thinking here? The consumers are out of their homes. We have a huge lineup for some of these big names, including Walmart. What are the expectations? At the end of the week, what are we going to be saying about retail?
Yes, Nicole, thanks for having me today. Yes, I think we're absolutely going in on an upswing here. Even though last week's numbers were a little bit soft in the retail sector overall, you're seeing a lot of positive momentum as consumers continue to engage. And what we're talking about with both consumers and our clients is a lot around this concept of and, not or. So it's not about stores or online, working from home or in the office. It's figuring out how to capitalize on the and the services and the categories that go along with it. So, one obvious area, of course, is it's time for an apparel refresh for all of us. We're starting to see that shift from comfort to style, a bit away from athleisure, in particular categories like denim, flowy dresses, and, categories that people are excited to start purchasing again.
Yeah, I'm looking here. I mean, I see almost 10 names: Foot Locker, Kohl's, Buckle, Ralph Lauren, L Brands, Target, just to name a few folks. Okay, so you get the feel here. Walmart, Home Depot. Sucharita, you said Target is reporting. This one seems like it's in a good position, right, versus Kohl's and L Brands. Why is that?
Well, there's the momentum of 2020, but I think that more than anything, Target is going to be a harbinger of what we're going to see in the future, because if they have a strong finish in March, which their earnings will let us know if they are or not, and we'll pretty easily be able to see that based on the comps in 2021 over 2020. We'll see whether the shopper is resuming their behavior that was pre-pandemic behavior, or whether there continues to be the residual impact of the pandemic that may carry us through Q2. A lot of these brands like Kohl's and L Brands, they're going to have pretty dismal numbers, I expect, because you're talking about January and February numbers, and we were still in the midst of the pandemic. Vaccines had barely been distributed. We were still very much worried that we wouldn't get mass vaccine dissemination until late Q2, probably Q3. So I think that their numbers, I wouldn't expect much. The bigger bellwether is going to be Target.
Katie, what are your thoughts? I know you're looking at some of the trends too about what customers want, who they trust as far as where they shop. What kind of trends are you seeing and how that might translate? I mentioned some names during earnings, but what's the big takeaway here?
Yeah, I think looking forward, Sucharita made some great points about Target, and in particular, you'll still see some carryover from overall trends such as trip consolidation. So people have really gotten used to buying all their purchases at one place, and they've also made a lot of strategic partnerships with D2C brands and other brands that will really benefit them going forward. I think other brands that are poised for success is like a TJ Maxx, because people really love that treasure hunting in-store experience, and that's something they're looking to get back to. In a broader sense, we're launching our quarterly briefing tomorrow focused on consumer trust. And consumer trust in businesses is actually building. In large businesses, it's up 4x over the last 5 years. In order to keep that trust, we really need to see these retailers just show honest and consistent messages, as well as strong processes and operations, including some of the services like curbside, strong performance there, as well as returns processing, and making sure that they figure out how to make that easy for consumers still.
Right. And what indicators do you watch most closely, Sucharita, to really get a feel of what may or may not do better or worse?
I'm looking, Nicole, at foot traffic. I use resources like Placer.ai, which I think has been a great resource through the pandemic, just to see how the numbers have been. They have not just the year-over-year numbers, but also the pre-pandemic numbers, which are essential to seeing how much off we are of the pre-pandemic levels. I'm looking at, of course, the SEC numbers, and I'm looking at the census numbers too. The census numbers for the month of April payroll were just released last week. And what we see there is that restaurants have barely made their recovery. And we're expecting it to happen any day now. We're expecting the numbers to comp the pre-pandemic numbers. It hasn't happened yet. And then that's why you see the lift in companies like DoorDash, because they are essentially still experiencing a pandemic bump. We haven't seen the normalization of consumer behavior across the entire country yet. And until we get there, I don't think we're going to get a clear read on how the recovery is going to shake out across every sector.
Yeah. Katie, quick final thought here as we look at people breaking out of their homes, maybe a little less e-commerce. I don't know.
Yeah. Oh, yeah. We absolutely think consumers are going back to stores. They miss that. That's one of the top things that they say when we talk to them. So we're really just expecting a lift back to stores. The only watch out I have is some of the pricing and inflationary impact we're seeing start to flow through. So that'll be something I have my eye on going forward.